What is budget? It is a numerical plan for allocating resources to specific activities. The main objective or importance of budgetary control is it has been used to plan and control the income and expenditure of the organization. It aims at the maximization of profit and provides an adequate working capital. It decides upon and controls the expenditure on development and research and decentralizes the responsibility of various individuals in the organization. It is a useful device for motivating the managers to perform in line with the company's objectives. So that is why they are used as a performance evaluation. The classifications of budget can be defined as functional classification, time classification, and rigidity. So according to the functions of the budget, there are like sales budget, production, cost of production, material requirement, direct labor, capital expenditure, administration cost, research and development, quantities, cash and profit. For example, in sales budget, it has an estimate of expected sales during a budget period. The accuracy of this budget determines the accuracy of other functional budgets. It acts as a backbone of the enterprise so that the sales manager should be made directly responsible for the preparation and execution of this budget. The next one is production budget. It is a forecast of the output for the period analyzed. It has been prepared after taking into consideration of estimating opening stock, estimated sales, and the desired closing stock of each product. Next one is cost of production. The production budget determines the number of units produced during the budget period. When these units are multiplied by the cost of the manufacturing per unit, it becomes the cost of production budget. The next one is material requirement budget. This budget deals the requirement of direct materials. This budget should be related to the production budget and the estimation for different types of raw materials is prepared for various products. The next one is direct labor budget. It is a forecast of requirements of direct labor essential to meet the production targets. It reveals the expected labor requirements during the budget period. This budget helps to prepare the suitable plans for recruitment and training labor. The next one is a capital expenditure budget. It deals the capital expenditure for plant, machineries, equipment, and the other items. It has been prepared after consideration the available of production capacities, assets, and possible production techniques. The next one is administration cost budget. This budget contains the expansions in framing policies, directing the organization, and controlling the business operations. It covers the estimated expenditures of administrative offices and management salaries. The budget can be prepared with the help of past experience and anticipated changes. The next one is research and development budget. Every good business organization conducts the research to find new products and improves the quality of old products. For this purpose, some money should be needed. This budget is prepared taking into consideration with the help of new research projects made in hand and the projects taken up. The next one is quantities. Quantities is nothing but machine hours, units of materials, direct labor hours, square feet which are allocated. All the budgets are not expressed in monetary terms. So that is why the next one is cash budget they are using it. This budget gives an estimate of anticipated receipts and payments of cash during the budget period. This budget is prepared by a chief accountant for the guidance of the management. The cash budget normally contains the sufficient cash whether it has been ensured for business requirements. If there is any shortage of cost, it can be adjusted through overdraft. The objective of the cash budget is the proper coordination of the total working capital, sales, credit, and investment. The last one is nothing but profit budget. It combines the cost and revenue budget. It consists of a set of projected financial statement and forthcoming year schedules. That is why it is also called as a master budget. Next one is the classification based on time. So according to the time frame, there are a long term, short term, and a current budgets. These long term budgets are useful for the period of the budget is for 5 to 10 years. The short term is for 1 to 2 years, and the industries such as textile, pharma, and cotton industries uses these short term budgets. The current budget is the budget it acts as a day to day activities of the business. These budgets are prepared for a few weeks or few months. Next classification is based on rigidity, like fixed, flexible, alternative, and supplementary. In this budget, targets are rigidly fixed. It is a forecast of the target for forthcoming years prepared well in advance. Sometimes it is even prepared for 2 or 3 months before the year. These targets are used as a standard yardstick to measure the actual performance. Though a fixed budget can be revised whenever the necessities arises, but generally their nature is a static character. Flexible budget, it is a budget designed to change the level of activity, or it is also known as a variable budget. The flexible budget is desirable in the following cases like where the sales are not predictable in the business, like for example luxury trades. When where the venture is a new one and therefore it is impossible to forecast the public demand. So it is desirable to take the business in subject to the nature such as software, etc. The preparation of flexible budget necessitates the analysis of all overheads in fixed, semi-variables and variable cost. The next one is alternative budget. Another variable budget is alternative budget. Sometimes a company prepares three types of budgets like high, middle and low level. After getting the approval of top management, the managers will be informed so as to plan and control budgets. The last one is the supplementary budget. Initial stages of the company formalization of policies and procedures that time supplementary budgets can be used. It is prepared for primary purpose of the company. It is a minimum budget, so the supplementary budget is prepared in each month on the basis of business activities.